Hello and welcome to the IMFG quarterly report for the March quarter. I'm Lisette Walsh, Private Client Specialist, and this is Dr Steve Garth, who sits on our investment committee. Steve, I believe it's been a pretty good quarter.
It's been a great quarter, Lisette. Markets around the world are up. Let's start with Australia. You can see here that in the quarter, up 5.1%. And over the last 12 months, it's a stunning 14.4% return. And of course, this is coming off the back of that massive rally at the end of last year. You can see in the chart there. Many people thought that, we'd wake up on New Year's Day going, this rally can't continue. But in fact, it has. So very good performance for the Aussie market over the last quarter.
Excellent. So we're a pretty resource-heavy economy. Is that due to that?
Well, in fact, it's the opposite. If I show you the chart here, I think everyone knows that Australian market's pretty concentrated. Financials and resources make up more than 50%. So financials, they're on a tear. They're up 12% for the quarter, 28% over the 12 months. But when I look at the resources or the materials sector, and that's really BHP and Rio, that's down minus 6.2%. And that's really got to do with the fact that iron ore has fallen out of bed. It's down by 20% for the quarter. And that's because at the moment, China's demand for our iron ore has just evaporated. That economy is very sluggish.
And how are we doing in international markets?
So when we look overseas to the developed markets, they're having a cracker of a quarter. Developed markets overall up 13.9%, and you can see that's really led by the US. In the past though, particularly last year, the US was the leading region of the world index. But it was being led by this small cohort of stocks, what we call the Magnificent Seven. They're the big tech stocks everyone hears about. This quarter, though, it's a little bit different. The market's more broad-based. Other companies in the US, besides the tech stocks, are also doing really well. And it's not only broad-based around America, it's broad-based around the world. You can see on the chart that Europe, another big region of the world index, and Japan also are having great quarters. Japan, in fact, is doing better than the US in Aussie dollar terms over the quarter and the year. So strong rally in global markets.
You mentioned that China's not buying our resources. Is that representative of the emerging markets?
It's representative of China being in a slump, and so that affects the emerging market index. And we're showing the index here, and you can see it's compared to the developed market. It doesn't look so good, but over 30% of that index is in China. China's only up just over 2% for the quarter, and it's down staggering minus 14% for the year. So that's really pulling down that emerging market index. But we should say that the other big countries in the emerging markets, South Korea, Taiwan, India, they're all going gangbusters. They're doing as well or better than developed markets.
Well, that's really great news. As we don't really forecast at IMFG, I'm tentatively asking you about the outlook.
Yeah, so look, the outlook is all blue skies in a way, Lisette. Interest rates are coming down. Market's very excited by that. Unemployment remains low. Economic growth is okay and getting better. So we're not heading into a recession. In fact, we're having what's called a soft landing or even no landing where economic growth just continues. So in a way, everything was good. It's hard to see any risks on the horizon, but we know that markets are volatile, and therefore it's the risks that we don't see coming that'll probably cause a little bit of volatility going forward.
Well, thank you for your time today, Steve, and thank you for watching. We hope this information's been useful, and we'll see you next quarter.